Question 666. Literal rights concern properties adjoining the following: A. Ocean, B. River, C. Lake, D. Both A and C. Correct answer is D. Both A and C. Literal rights specifically concern properties that border oceans and lakes, or other large, non-flowing bodies of water like seas and bays. These rights typically relate to the use and enjoyment of the shoreline and the water. Riparian rights, in contrast, concern properties that border rivers and streams, flowing bodies of water. Therefore, literal rights apply to properties adjoining both oceans and lakes. Question 667. No two pieces of property are exactly alike, which is one of the reasons the courts devised the legal concept of A. Estoppel, B. Easements, C. Specific performance, D. Lee pendens. Correct answer is C. Specific performance. Estoppel is a legal doctrine that prevents someone from asserting a claim or right that contradicts what they previously said or did, especially if another party has relied on that action to their detriment. While it's a legal concept related to property, it's not directly tied to the uniqueness of land as the primary reason for its existence. Easements are legal rights to use another person's land for a specific purpose. They address the shared use of property, not the remedy for breach of contract based on uniqueness. Lee pendens is a notice filed in the public records to warn all persons that the title to certain property is the subject of a lawsuit. It ensures that anyone acquiring an interest in the property during the lawsuit does so with notice of the pending legal action. It doesn't directly address the remedy for a breach of contract based on the property's unique nature. Specific performance is a legal remedy in contract law where a court orders a party who has breached a contract to perform their specific obligations under the contract. It is often granted in real estate transactions because each piece of land is considered unique and irreplaceable. The legal maxim, "No two pieces of property are exactly alike," underscores this uniqueness. Therefore, monetary damages might not adequately compensate a buyer if a seller breaches a real estate contract, as the buyer cannot simply find an identical substitute. Specific performance grants the plaintiff what he actually bargained for in the contract. Question 668. A voidable contract remains in force until it is A. Modified, B. Conformed, C. Rescinded, D. Notarized. Correct answer is C. Rescinded. Modification changes the terms of the contract but doesn't necessarily invalidate the original agreement. A voidable contract can be modified, but modification doesn't automatically make it no longer voidable. Conformed is not a standard legal term used to describe the termination of a voidable contract. It might refer to making something comply with a standard or regulation. Notarization is a process of verifying the identity of the signatories to a document. While it can add to the authenticity of a contract, it doesn't affect whether a contract is voidable or the process by which a voidable contract is terminated. A voidable contract is a valid contract that can be rejected by one of the parties for a legally sufficient reason, such as lack of capacity, duress, fraud, or misrepresentation. It remains in full force and effect until the injured party takes action to rescind, cancel or revoke it. Question 669. With a property with more than one mortgage on it, the one with the highest priority usually A. has the highest interest rate, B. has the lowest unpaid balance, C. has the highest unpaid balance, D. was recorded first. Correct answer is D. was recorded first. The interest rate on a mortgage does not determine its priority. A later mortgage can have a higher or lower interest rate than an earlier one. The outstanding balance of a mortgage does not dictate its priority. A smaller, later mortgage is still subordinate to a larger, earlier mortgage. In real estate, the priority of mortgages is typically determined by the order in which they are recorded in the public records of the county where the property is located. This principle is often referred to as first in time, first in right. First recorded mortgage is the senior lien or the first mortgage, and it has the highest priority. In a foreclosure involving multiple mortgages, the proceeds from the property sale are distributed based on recording order. The mortgage recorded first, known as the senior lien, is paid off completely before any funds are distributed to junior liens, those recorded later. Some liens, such as property tax liens, have automatic superiority over essentially all prior liens. Question 670. A seller's broker can be liable to the buyer when A. The listing agreement is of the exclusive right to sell type. B. Acting beyond the scope of their employment contract. C. Acting as an attorney in fact for the seller. D. Either A or C. Correct answer is B. Acting beyond the scope of their employment contract. The type of listing agreement, exclusive right to sell, exclusive agency, open listing, primarily defines the broker's entitlement to a commission from the seller. It doesn't inherently create or negate the broker's potential liability to a buyer for their actions. When a broker acts as an attorney in fact for the seller under a power of attorney, they are essentially acting in the seller's place. In this role, their actions are generally attributed to the seller, and liability for misrepresentations or failures to disclose would typically fall on the seller, not solely on the broker acting within that authorized capacity. A seller's broker has a primary fiduciary duty to their client, the seller. However, they also owe certain duties to third parties, including the buyer. Liability to the buyer typically arises when the broker breaches these duties. If a seller's broker makes misrepresentations or fails to disclose material facts to the buyer that are outside the authority granted to them by the seller in the listing agreement, the broker can be held liable directly to the buyer. This is because they are acting on their own accord and their actions are not solely attributed to the principal, seller. Question 671. On the sale of a business, which of the following items would incur sales tax? A. Furniture. B. Goodwill. C. Fixtures. D. Both A and C. Correct answer is D. Both A and C. In California, the sale of a business can involve the transfer of various types of assets, and whether sales tax applies depends on the specific nature of those assets. Generally, sales tax applies to the transfer of tangible personal property in the sale of a business. Here's a breakdown of items that would typically incur sales tax. Tangible personal property. This is the key category. It includes items that can be seen, touched, and moved. Examples in a business sale include 1. Inventory. Goods held for sale in the ordinary course of business. 2. Furniture and fixtures. Desks, chairs, display cases, shelving, etc. 3. Equipment. Machinery, computers, cash registers, tools, etc. 4. Vehicles. Delivery trucks, company cars, etc. 5. Supplies. Office supplies, cleaning materials, packaging materials, etc. Items that typically would not incur sales tax. 1. Intangible assets. These have value but are not physical. Examples include plus, goodwill, the reputation and customer relationships of the business. Plus, trademarks and patents, intellectual property rights. Plus, copyrights, legal rights to creative works. Plus, customer lists, information about customers. Plus, non-compete agreements, contracts restricting the seller from competing. 2. Real property. Land and buildings are generally exempt from sales tax but are subject to property taxes. 3. Services. The transfer of services is generally not subject to sales tax, although the sale of tangible personal property as part of a service might be. 4. Certain exemptions. There might be specific exemptions depending on the nature of the business and the assets being transferred. For example, certain bulk sales of inventory might have specific rules. In summary, when selling a business in California, Sales tax will generally apply to the tangible personal property included in the sale, such as inventory, furniture, and equipment. Intangible assets and real property are typically exempt. Goodwill, being an intangible asset, is usually exempt from sales tax. It's always recommended to consult with a tax advisor or the CDTFA for specific guidance on a particular business sale. Question 672. A major advantage of an investment in real estate over the stock market is A. Appreciation, B. Depreciation, C. Interest rate decline, D. Like-kind exchanges. Correct answer is B. Depreciation. Real estate investors can deduct a portion of the cost of their income-producing property, excluding land, over its useful life. For residential rental property, this period is typically 27.5 years, and for commercial property, it's 39 years. This non-cash expense reduces taxable income, leading to significant tax savings for investors. Stocks and bonds do not offer a similar depreciation deduction. Investors in these assets can only realize a gain or loss when they sell the investment. The depreciation deduction can create a situation where an investor has positive cash flow from a property but shows a lower taxable income, or even a loss on paper, further enhancing their overall return. While like-kind exchanges offer a powerful tax deferral strategy, depreciation provides an ongoing tax benefit that directly reduces an investor's taxable income year after year, which is a distinct advantage real estate holds over the stock market. Both real estate and stocks can appreciate in value over time. While real estate appreciation can be more stable, historically, the stock market has often provided higher average returns. Question 673. Once a listing agreement is signed, a fiduciary relationship exists between the A. Broker and seller, B. Broker and buyer, C. Broker, buyer and seller, D. No fiduciary relationship exists. Correct answer is A. Broker and seller. Typically, the seller's broker has a fiduciary duty to the seller, not the buyer. The buyer is usually considered a customer to the seller's broker, to whom the broker owes duties of honesty and fair dealing, but not the full range of fiduciary duties. The buyer is usually considered a customer to the seller's broker, to whom the broker owes duties of honesty and fair dealing, but not the full range of fiduciary duties. A buyer can establish a fiduciary relationship with their own buyer's agent by signing a buyer representation agreement. A single broker cannot simultaneously have a full fiduciary duty to both the buyer and the seller in the same transaction without informed consent and a clearly defined dual agency relationship. Even in dual agency, the fiduciary duties owed to both parties are modified due to the inherent conflict of interest. A listing agreement explicitly establishes an agency relationship, which by law creates fiduciary duties on the part of the broker towards the seller. A fiduciary relationship is one of trust and confidence where one party, the fiduciary, is obligated to act in the best interests of another party, the principal. Once a listing agreement is signed, the seller becomes the principal, and the broker, and their agents, become the fiduciary. The broker has a legal and ethical duty to act in the seller's best interests, to be loyal, to disclose relevant information, to account for funds, and to exercise reasonable care and diligence. Question 674. A provision in a security instrument stating that the instrument will have a lower lien priority than another mortgage or deed of trust is called a acceleration clause, B. Secondary lien position clause, C. Subordination clause, D. Priority positioning clause. Correct answer is C. Subordination clause. Acceleration clause allows the lender to demand immediate payment of the entire loan balance if the borrower defaults on certain conditions, such as failing to make payments. It does not relate to lien priority. While secondary lien position clause describes the outcome of a subordination, it's not the name of the clause itself that dictates the change in priority. Priority positioning clause is not a standard term used in security instruments to describe the agreement to alter lien priority. A subordination clause in a mortgage or deed of trust is a provision that allows a later recorded lien to take priority over an earlier recorded one. This is commonly used in situations like 1. Refinancing. When a homeowner refinances their first mortgage, the new lender usually wants to be in the first lien position. A subordination clause in the original mortgage allows it to automatically become junior to the new, refinanced mortgage. 2. Home equity lines of credit, HELOCs, or second mortgages. These are typically junior liens to the first mortgage. The first mortgage often contains a subordination clause that anticipates and allows for these subsequent liens to be in a lower priority position. 3. Development loans. A lender providing financing for the development of land might require a previously recorded blanket mortgage to be subordinated to the new construction loan. Therefore, the specific provision that establishes a lower lien priority for a security instrument compared to another is called a subordination clause. Question 675. A salesperson must have with a broker that the salesperson that covers supervision of licensed activities, duties and compensation. A. Basic understanding. B. Signed, written agreement. C. Mutual stake in ownership. D. None of the above. Correct answer is B. Signed, written agreement. In California, a real estate salesperson must be employed by and work under the supervision of a licensed real estate broker. This relationship is legally required to be documented by a signed, written agreement. This agreement outlines the terms of their association, including 1. Supervision. How the broker will oversee the salesperson's licensed activities to ensure compliance with real estate law and ethical standards. 2. Duties. The responsibilities of both the broker and the salesperson. 3. Compensation. How the salesperson will be paid, e.g., commission splits. 4. This written agreement protects both the salesperson and the broker by clearly defining their roles and responsibilities. While a good working relationship requires understanding, a formal, legally binding agreement is necessary. A salesperson does not need to have an ownership stake in the brokerage. They are typically employees or independent contractors.